they kick at your front door. How you gonna come? With your hands on your head or on the trigger of your gun. When the law breaks.
Welcome back to the Florida CME Group here Friday, August 5th, Unemployment Day. I'm Killer from Treasury Curve. Wow, folks, we really saw the blood in the streets yesterday. Dow Jones down over a nickel. That's 500 puntos, folks. That was a huge day. We really saw them come and grab and panic in the Treasury market. They came after it, brought that 10-year underneath that 2.5%, and that's been the level I've been talking about. That's been the target. Actually went down even further, about another 10 basis points after that. So a 240 situation, really kind of representing the panic in the market yesterday. Now let's fast forward to this morning. We saw the job number come out. It acted as a temporary tourniquet. It actually stemmed the bleeding in the market. We saw a nice little rally in the S&P. We actually saw that Treasury come off a little bit. But everybody around here, we were talking about this. In the event we get a decent number, you're going to want to sell that. If you follow me on @TheKiller on my Twitter account, I said you got to sell this pop in the SPOO, and sure enough, it came back. And if you looked on the chart, there was a great gap on that number, 1202 up to 1206. No volume traded. Someone came and bought them. Those HFTs are really in control today. But I said if you faded here, they have to go and back and fill on the chart at 0206. They did, and now they just played down and made a new low down to 77, 1177, folks. Really seeing the last 9-10 trading days. You know, we were trading up in the 1300s there for a while. If we rewind it 1 month unemployment, we're up at the 1340 level. So we really see this 10-11% breakdown, and we're really concerned about Europe. And I think all of the magnitude of this move, let's talk about this for 1 second. The magnitude of this move, I think it's all due to the fact that we were actually put on pause. You know, this Washington leadership, or lack thereof, they really made this problem escalate, because nonetheless, they put the global market on pause. Now people are coming in. It's the Friday before the weekend. We don't know what's going on in Europe. You know, the pigs, P-I-I-G-S, they are front and center again, and people are really concerned. We're seeing Spain and Italy at the highest, you know, yields in their bonds they've ever had. So how does that help them, you know, right now? Well, it helps them come together and have a conversation. So hopefully we'll work through this, but obviously there's more bloodshed coming. So right now we're consistently looking at the Treasury market as leadership. Yesterday, a very, very key component to the liquidity, right? 2008, everyone was worried about liquidity or the lack thereof. So now we're trying to get out in front of it. Bank of New York came out yesterday and actually implemented a fee, a 13 basis point fee to give them cash. So wow, folks, if that doesn't tell you what's going on here, Bank of New York doesn't want any more money. They don't know what to do with this cash. So everyone's trying to figure out where to go for liquidity. So I think the Fed next week is going to come in. They have to implement something. They have to come in and tweak some type of language, or actually backstop this liquidity situation, because the ECB only has about 275 billion more euros left before they knock on our Fed window. And what's collateral there, folks? So this could get a little crazier before we get through it. Stay tuned. I'll see you next week. I'll be in town. And one other thing for the rest of the day, be the hammer, not the nail.